How's everyone doing? We're gonna rock and roll today. I'm excited to be here. Today is Thursday. I believe it's the day before NFP, meaning we probably shouldn't be trading, to be honest. But we're gonna keep it light today. We're gonna exercise our most valuable asset, and that is being patient. When you think of maybe the amount of time that you're in a trade, a few minutes, 10 minutes, 20 minutes, compared to the entirety of the day, it's a very short period of time and a very long period of time of being patient. So let's take a look at the market. Let's get settled. Let's get rocking and rolling. Let's start with the news. Let's just see what we got for news here. There we go. I'm got some audio going on, computer mute, some music. Let me know if it's too loud or not. Let's see, screen share. There we go. Today's Thursday, so let's see what we got. We had news at 8:30 in the morning. We got PMI at 10. Okay. Interesting. It's going to be a full day today. We might have some volatility. Volatility is good. It can be very bad as well. Ooh, there's the 8:30 candle. Look at that 8:30 candle there, folks. Right here. No wick. No wick down here. I don't think we will come back down to it. It just depends where we're at, I guess. Let's take a look. Good morning, Don. How you doing? How's your day going, man? How's trading been going for you? We're going to start on a higher time frame, the daily. Let's get rid of some of these things. See where we're sitting. So we've been quite heavy. Honestly, this day here was the most surprising, September 3rd. I did not expect a move like that. Honestly, I thought we would hit these highs. We didn't. We made another relatively equal highs. Jonathan, how you doing, man? We're going to leave these there. I'm committed to them at this point. That laugh is me admitting how wrong I've been on how many times I'm like, we're going to go to these highs. We've ran towards them. I've made trades going towards them, but we never actually hit them. Quite disappointing. Okay, what do we got here? We're still inside this daily fair value gap, and yesterday's price action wicked back up out of the daily fair value gap. My expectation is we find support somewhere in this daily fair value gap, and we're going to make some type of move higher. So let's drop down to the 4-hour. Now, I could be completely wrong. It depends on the news that we're getting here. I mean, we got a lot of volatility, a lot of news, so in the grand scheme of things, I think we'll probably consolidate. Maybe wick lower, wick higher. It could be a combination of the two. We got these nice equal lows here. That either will be ran today or will be saved for non-farm payroll. So we'll mark those as some equal lows. This is the morning routine, guys. This is what we do every morning. This is a weekly range here. If you're seeing this red line, this is the equilibrium of the weekly range from last week, I believe. Let's see. We're inside the weekly fair value gap as well. Where are we on that? Let's see. I did get my latency. I was able to get my latency down to ultra low. So let me know how delayed it is. Right now it's 9:27, 25, 26, 27. Let me know how delayed it is. Ooh. Hanging out there. Okay. Just set this over here for now. I want to mark out our new day opening gap. Should be over here somewhere. Here it is. No way. We're not. No music. No, none of this crap. I refuse. So this is 9/5. I like to mark these and put dates on them so then I can identify them very quickly and remove the ones that are irrelevant for me. Next thing I want to do is mark our midnight open. Whoops. One minute till the open, folks. And then once we have the open, we will mark our opening range gap, which we have 11 seconds till the open. So we're going to move to our regular trading hours, and we should see a gap form right here. We're going to mark that here. There it is. And it's moving straight up into that gap. Do you guys see that? This is the first 30 minutes, 70% of the time this gap is filled. Okay. Here's our midnight open, and then we'll also mark our 9:30 open. So there's 9:30. Now we can drop down to our regular trading hours. We got everything marked that I want to have marked. And we'll see what we got here. We just swept a little bit of liquidity and tapped the midnight open. This is a signature in price, especially if it's right at open, where we'll probably run all of this. Or at least this high here. Oh, this is a, nope, wrong midnight open. This is an old one. Interesting how it referenced that though. We'll take that off. No delay. That's what I'm talking about, friends. That's what I'm talking about. That's what I like to see. No delay. You guys are getting down to the second. That's great. Hit that like button for me, guys, if you appreciate the commentary and just the overall analysis as we kind of get going for the day. Right on the left-hand side, we got the 4-hour. I'm still trying to put together my analysis. I really do like these equal lows. If we get some type of setup that shows me it wants to run for these, I will take that. As we drop down to the 1 hour, we have no liquidity, no fair value gaps, just liquidity down here. But the last hour is the one that made this wick. So this is from the news, right before news. We dropped all the way down and then we explode higher. So more than likely we're going to grab this wick at some point as well. We'll just mark that. Let's see if we get an opportunity to either go for this high or this low. That's kind of what we're looking for. But we do have, what did I say for news? We had, Thursday at 10 o'clock PMI or ISM services PMI. That's at 10. So we're going to be careful and probably not take anything prior to that, simply because that would be a mistake for the most part. See, in price action like this, you really can't do anything with it. That's not very fun. You wick high, come down, wick high, come down, and then you're going to start expanding. There's nothing for me to work with in there. Maybe a 30 second. I bet you there's something on the 30 second. Nope, I was wrong. And even on top of that, we have this 1 minute fair value gap sitting right here, which makes an inversion fair value gap because we closed above it. But the very next candle closed below it, invalidating the trade, and then it goes higher. Now look at where it stopped. Did you see where it initially stopped? It stopped right at that high right there. Obviously it pushed past it, but this is the kind of signatures and price you can't see on after the fact. You only get this type of education when you're sitting in front of live price action. You get when you have preset levels on your chart and you begin to see it run to the tick to those levels, as in like, hey, I know you're watching, or like, hey, I know this is an algorithm. Those things build that confidence for future trading on your part that you have the right ideas. Obviously, we're not taking a trade off of this, but the point is still the same, to build that education, to build that confidence in your trading and your understanding on how price moves. Okay, so we have this 1 hour that's already covered there. We have a new day opening gap from the 5th. Our new day opening gap is sitting right here. See how it was touched right here and then it dropped? Reference that new day opening gap that I marked here this morning. And then it collapsed. Let's drop down to the 15 minute here. Let's see if we got anything. All right, we just we filled the 15 minute earlier at 8:30, and then we got the 15 minute still messing around with that 15 minute again. We're gonna pull this back a little bit. There's not much of a point for us to have this, unless I can make it lighter. Oh, I picked the wrong one. Oh, I like this low resistance liquidity right here. There's not a fair value gap that's open. Everything's taken here. So a lot of consolidation, a lot of back and forth price action. Got our daily 15 minute fair value gap sitting up here. This is the only open fair value gap right now, is this one. Everything else has been filled at least once. Drop down to the 5 minute. This is probably a trade idea right there, but I'm not taking it. This 1 minute right here. I bet you it's working. There's a close above. Let's see if it actually runs to these highs. So we're on the 5 minute now. Let's see if we got here. We got a 5 minute fair value gap sitting right here. Here. There. Man, the 5 minutes been referenced quite a bit. If you don't know what I'm talking about, I'm look at these swing highs. Look at these swing highs, and then all you have to do is look left. Swing high, swing high. Look what it runs into and then turns around. 5 minute fair value gap and the new day opening gap. Now look at this next one, swing high. 5-minute fair value gap. This is why I like the 5-minute. I like the 5-minute for identifying when price is going to change directions. All right, so that trade idea worked here. It was post. I identified it a little late, and I wasn't going to take anything before news anyway. Except price right now is running pretty nicely. So that may change my opinion if we get some obvious type of setup. But a lot of wicks, a lot of highs. The price could turn at any moment after these swing highs. So the goal is identifying the correct swing high that you think we want to target. And I would say this one right here is decent. Let's actually drop to the regular trading hours so we can not look at overnight. So this is all price action here. Okay, so this swing high right here is the PM, is the high for the PM session. Okay, that's the high for the PM session. This is the high of the day. Previous day high is right here. So we're going to mark that out. Previous day high, and this is a swing high. Or this is the PM buy side liquidity. Previous day PM buy side liquidity. It might actually be this high. That's considered noon. I'm going to drop it to this. I'm going to drop it to this level here. Typically 1300, 1 o'clock. 1 o'clock after is our noon session. But it's not wasting time. It is running somewhere and running somewhere with purpose. We'll get some. Thing you gotta remember is there's always another move. We will get a sliver. We just need a sliver, just a nice little piece. All right, so we did grab this high sitting right here. That high. That was our first swing high from yesterday's. No, it isn't. That's from 1400. Okay. And drop down to the 30-second here. Get a little more structure. Zero, I mean, just green candles all over the place. Nice reaction on the new day opening gap right here. Based on that, I would assume it didn't fill any fair value gaps though. Wonder if there's one on the 1 minute. Yeah, so it filled the 1 minute fair value gap. Good morning, everybody. Hopefully you're having a blessed day today. It's Thursday. We got news at 10 o'clock, so we got 20 minutes before we get the green light for trading. We're not doing anything before then unless absolutely clear, obvious trade shows up. We're not going to try to make nothing happen, so hit that like button if you don't mind. If you appreciate the commentary, completely free. And then if you do use Apex, use the code DTJ right here. Code DTJ for the most up-to-date discounts. I just passed an eval yesterday. For those of you that may have been on, I passed an eval yesterday. live on stream, brand new, passed it there, and I just got that added to my account this morning. So I have a brand new funded account that I added. So yeah. Oh my gosh. I'm sick of this. Sick of this. Why? It'll make sense when it's Christmas time, but it's not Christmas. Okay, look at the wicks and look at the bodies. Look at the wicks and then look at the bodies. Signature and price, I'm not saying it's going higher, but the bodies are telling me it wants to go higher. Okay? The problem with just going off of this alone is very difficult, especially if you don't know what the upside target is. Maybe the upside target was hit in this candle because that is a large wick with a very small body that's bearish, a bearish body. But we're finding support immediately after we broke through this, telling me, have we hit our high? Do we have a higher high to go? Is it this, the previous day PM buy side liquidity, or is it the previous day high? We don't know. Either way, we haven't grabbed any major buy side or sell side liquidity. I'm going to put on the previous day low as well. So we got previous day low and previous day high sitting in here, and we are trading inside of that. So typically your easiest and most obvious trades are going to be after you purge one of those lows or highs, either the previous day low or high. Typically you get some of your best setups after that. Now sometimes they're so far away, so too high or too low that you don't get that. So you got to look for the next most obvious levels, which I don't think we really have those right now. We could take this as buy side, and it's deciding to stop here right after it wicked this level here at 1430. Where was our first fair value gap? We're going to mark that as well. That seems obvious, especially since it overlaps with this swing high. This is the kind of music I like right here. Good morning, Alki. How you doing, my friend? How's your day? How did trading go yesterday? Did you say you got off after 3? Doing the 3 trade challenge, 3 and out? I couldn't remember. I know somebody said that. We don't want to do anything in this, guys. There's uncertainty here. We don't know if it's going higher or lower. If you're going to get in a trade, you need to know what direction it's going to go. As far as I know, I'm looking for a short. That's honestly what I'm interested in. I'd like to go short towards this previous day and these equal lows down here. Those equal lows right here. Patience is everything. Patience is everything. As far as executions today, I have some that's going to be off screen, and I may do 1 or 2 on screen. Let's see how it goes. I kind of don't like to be super consistent in that. Main reason is I'm not interested in signal bots, just copying trades or being on here. I'm looking to build a community of traders for education, as well as just for a community. Expanding the kingdom of heaven here on the earth. That's my desire. All right, so nice drop expansion. Let's see how it closes, though. If it's just going to remove all of that and close really with a small body, really leggy, then I'm not, we're just going to wait. Tells me we may have higher prices to come. We just did fill the 5-minute fair value gap. We had the 5-minute fair value gap right here. Very nice to see. Let's go to electronic. It's also a breaker that's happening right there. From this swing high, boom, to the tick. You see that? Look at that beauty. See that? Can you get any better than that? I mean, it would make sense if I spent time trying to find the candle that would overlap perfectly, but I don't have to. The reason why I can find it so quickly is because if we can identify the breaker, low, high, lower, low, we take the body close or the wick high, one of the two, and we drag it over. I mean, you're going to see how the precision of these concepts are. So really nice reaction. Let's look at the 30-second here. There's not even a 30-second option here. Do you see how all of this is taken out? What I mean by that is all of the fair value gaps are overlapped and there's nothing. We got this volume imbalance, but that's it. We just closed above that, but I'm not taking a long off of volume imbalance. I have a nice breaker here, but that was a boom. I mean, that was a quick reaction, even on the 30-second. So not much for opportunity. That was a 30 handle. That was 30 handles in 30 seconds. So can't do anything. This just tells me, again, confirms to me we need to wait till after news. We got 10 minutes. I do like lower prices. This is the most obvious level here. The 1 minute. Let's look at the 2 minute. Nothing on the 2. There is a 3 minute. There's a few 3 minutes here. Here, here, and here. Don't like that. 4 minute. You know what I think I like? I like the close of a 5 minute coinciding with the 1 minute. So if we get a 5 minute close below this and the 1 minute close below this, I'd be interested. But obviously that's irrelevant if we're just going to move higher. For those of you joining, we're waiting till news to drop here in about 7 minutes, and we'll be free to clear to begin trading. We're waiting for some clear price action. Right now it's not, we're seeing signatures in price, but it's not moving in a way that's helpful for any type of model, right? We don't have any fair value gaps that we can base trades off of. We see nice reactions. I pointed this out. Nice breaker reaction on the 5 minute right here. Breaker high from the close of this candle to the tick, and it exploded higher, but it left no fair value gaps for us to look for opportunities unless you were literally to take the trade right on the breaker, which I didn't see it before then. I don't want to mispronounce your name, M. Mihul. I learned the initial concept of fair value gaps and inversion fair value gaps from ICT. And then I learned more from Daji D. Ryan. And then that's pretty much it. But I would say 90% of my study was ICT. Because inversion fair value gaps are pointless if you don't know how to read the market. If you can't read order flow or price, inversion fair value gaps are pointless. Hey, by the way, Ray Bear, I figured it out. Let me screen share. Let me show you right down here. Settings. I was able to select it. You got to select it before you start the stream. So I started before I started the stream. I double checked, and there it was. So I got it. I got it worked out. Now I know what to do. So yeah, we're gonna be getting live time reactions, not delayed stuff. So what I see is what you're going to see. I'm going to take yesterday's video and I'm going to turn it yesterday's stream, the latter half when I started doing when I started trading the eval. I think I took 5 trades. I went 5 for 5 doing the eval. I think I'm going to cut that up and turn that into a video. I have another video I've been working on. This week I literally have not worked on anything. I'm wanting to install solar panels on my house. So I got my solar panels delivered, and I've been kind of geeking out over that kind of stuff. Four minutes until news. We'll see what kind of reaction we get and see if we get any type of setup. But based on this candle here, my guess was we were going to go higher. I wanted to see us begin to move lower because I want to take a trade to the downside, but we may get that later. Because as of right now, if I look at this in the sense of power of 3, we have 2 options. Okay, here's our 930 opening price. So 930 is my opening price, consolidation, This is my manipulation. That means in my mind, we're going to get some type of expansion lower. Some type of expansion lower through the 930 price. That's option one. Option two is we're in a trending day, which is very hard for me to believe we're in a trending day considering NFP's tomorrow. So if we're in a trending day, this could just go up and up and up and never see this level again. So those are the two scenarios I have playing out in my mind. So right now I'm convinced that we're going to be seeing a some type of move lower. And that's kind of what I'm waiting for. So as you grow as a trader, if you want to grow as a trader, you have to trial and error different scenarios. I think it's going to go here. I think it's going to do, you can take the arrow tool and you can say, I think it's going to do this and then hit this level and give me another higher and then start breaking down lower and going to do something like that, right? You can start putting that structure together when you know how price moves or you have some structure around it. Then you can start guessing. Take educated guesses on what's going to happen with the market. And what happens is when you start seeing things play out the way you expected it to or the way you thought it may, it starts giving you confidence to take trades off of those ideas. And that's basically what I do. Basically, I've seen the markets enough. I've been in front of it enough to where when things play out a certain way, I take trades off it because I've seen it before. It doesn't mean it's 100% guaranteed. It just means I've seen it before, so I have more confidence to take that risk and put that risk on the table. And right now, that's what I'm hoping happens. And I just have to wait and see. So this is our previous day PM buy-side liquidity. So this is the high of the PM session. And then we have the high of the day. Okay, so those are the two levels we see here. High of day of yesterday and high of the PM session. We're referencing back the last trading session of the New York Times, of the New York sessions. So you have the AM, lunch, and PM session. There's news right there. And here's our candle. Let's see it wick up into the daily. That would be, or to the previous day high. That would be really nice. And then retrace. That would give me a lot of confidence to begin looking for a lower move. So we got the green light to trade now. Let's see what we can find. Still being cautious, knowing that NFP is tomorrow. Still being cautious. Not going to let my runners run. I'm not going to take runners. I'm probably just going to get in and out 10, 15, 20 handles. Right? My goal is to do longer trades. Yesterday we did a 100-point move. Last week I did a 160-point move. But my bread and butter for those joining that haven't been on the stream before is 10, 15, 20 handles. That's my bread and butter. That's what I like to get. And I'm happy if I get it. The more I get those bigger moves, the more I want them, though. I'm not going to lie. That's a true statement there. All right, we grabbed the previous day PM session. It doesn't look like we're stopping, so it looks like we're going to run the previous day high. Let's jump up to the 15-minute here. Let's get a bigger time frame view. So we have our 15-minute sitting right here, which is not completely filled in yet, by the way. The high, we basically tapped into it. You can see that right here. This is the high that went into this fair value gap. So we can fill this fair value gap in and still move lower. Then we also have this daily volume balance sitting right here, which we've already filled. ICT, he goes in back. I've heard him say both, which once they're completely filled, he disregards them. But if they're wicked through, they can be wicked through multiple times. But also that he can reference them even when they're closed. So I'm not exactly sure how I feel about the daily volume imbalance. I'm more interested in this 15-minute. I did also get a new eval account here this morning, so depending on what the day looks like, I may trade the eval account, and we'll do that on stream with you guys. It just depends how the day plays out. So I mean, when you think about it, since 9:30, we've gone straight up. The market has to turn the other direction at some point. That's just what the market does. So that's why I'm not really sweating price doing all this price action here. That's why I haven't taken a trade yet. Let's do a poll here. I don't need your information. I don't need your information, but we're going to do a poll. Have you taken a trade today? I have not. I have not taken a trade yet because, one, we just had news, and we literally have not seen any change in price action. Unless your model is, hey, it's trending, I'm going to go long here. I just don't know where you would have went long. This is where patience is. And what you're going to see most of the time, guys, is that most people are going to say yes, they've already taken a trade. So your goal as a trader is to be in the minority. Okay? How many people have said this? Okay, we have 5 votes. There's a lot more of you here. Give me a vote. Give me a vote here. Nobody knows who you are. I never voted either until I figured out nobody really knows when I vote or not. So hit the vote. Or hit yes or no. Let everybody know if you traded or not. Because I want people to see where most people are trading. Or what most people are doing. Okay? If I was to take this same poll with top traders in the market, people that make hundreds of thousands of dollars, I can almost guarantee you a majority of them would say no. They have not taken a trade yet. Some of them will say, yes, it doesn't matter. I do what I want, when I want. I don't care about news. That's fine. But I would say your goal as a trader is to be in the minority. We only got 10 votes. I got 10 more of you out there. Somebody do the poll. Let me know if you've taken a trade yet today. This is for our educational purposes. This is to help everybody grow as traders to see what the majority of people are doing. Now, I know this is a small sample size. When I got, finger slipped, I hit yes. Definitely haven't traded yet. Got it, Brendan. Good. So most of you, at least half of the 11 of you, said no. That's great. Your goal is to be in the minority of this poll. If I was to be on, some of those streams that have 500, 1,000, 2,000 people, most of them would say yes, they've taken a trade. If they're really being honest with themselves. It's just the truth. I mean, I remember being a new trader. I remember being a trader that had no rules, and I freaking tried to trade everything. Right now, we're just waiting for this to hit. This buy-side liquidity and the 15-minute. That's really what we're waiting for. Why do we got Christmas music? I don't understand. What channel am I on? Oh. All right, there's our wick right there, folks. Now, it'd be beautiful if we close red. It would be absolutely wonderful if we close red. We want to see this close down because what did I say? I want to target these lows. Previous day low and the equal lows down here. That's what I would like to target. Now, the next thing I do want to say, if we were to jump out to a daily time frame, look at the number of candles that run both buy side and sell side liquidity. You don't get a lot. So this buy side was stayed intact. This buy side was not ran. This buy side or this low wasn't ran. This low wasn't ran. This low wasn't ran. This low wasn't ran. Neither was this one. Neither was this one. Neither was this one. This one ran both the high, the high and the low. This one did not. Only ran the low. This one only ran the high. This one only ran the low. This one only ran the low. My point in saying this is what I'm asking it to do does not happen very often. So do I expect to take the trade all the way down here and actually hold through it? Probably not. Will I use it as a draw on liquidity? Yes, I will. I'm just saying the probabilities are less likely for both the high and low of the previous day to be ran. You can just see that obvious in price action. You see that everywhere in price action. But what do we have? We had a very small candle. So there's a chance that it could happen. Okay? If I'm targeting something, my initial target would be this breaker low. This swing low right here. We're going to jump to the 5 minute. We want to see a 5 minute change in state of delivery. So this 5 minutes is going to close in 22 seconds. I really don't like taking red candles. I would prefer that to be green, but that's fine. Okay. So this is our first obvious fair value gap. Am I going to take this? To be honest, I'm not sure. I don't know how I feel about it yet. Holy cow. Guys, I'm sick of this. I don't know why I keep getting freaking Christmas music. It's driving me crazy. I know, it's freaking ridiculous. Charles, good morning. Deborah. Hunsworth, good morning. All right, so a majority of you said no. That's what I like to see. We're waiting for that setup. Now, here's going to be our first opportunity. I think I'm going to let it play out without me. But this is your first target right here. I'm going to see how price reacts just on the first opportunity that we're getting, and may look at this as a breaker right here for it to come back up later. Okay, so if this closes below this fair value gap, we're looking for it to target this swing low right here. And if it does it before then it's obviously no opportunity. And if it closes down here, we would not want to take this anyway. Okay, so there's the close. Either it runs right now or comes back up to the inversion fair value gap for a theoretical entry, because I'm not taking this one. I'm not taking this. All right, so there it grabbed the swing low right in there. So that is a no trade because I'm not taking it that close to the profit target. This is, what would have that been? That would have been 7 handles. I'm not going to take that. With a 41 handle, geez. These are some big candles here, folks. All right, let's zoom in to make this more appropriate. This is more like what we're seeing right now. These are some big candles. Deborah, I'm sorry. I'm sorry. You'll get over it. It's now a flu, but we declare healing over your body in Jesus' name. Okay, so I like this high, low, higher high, and we have this nice breaker right here. Okay, we have a breaker sitting right here. We have a fair value gap on the left. We do not have a fair value gap on the right. And that pull. If you guys are enjoying the stream so far, you're enjoying the commentary, the analysis as we price read, hit the like button. I greatly appreciate it, guys. Completely free. It just helps me out, lets people know that they're appreciating it. Okay, we wicked up into there. Barely, and we're selling off here. I really wanted to come up a little bit higher. I'm going to be irritated if this just collapses right now. Son of a gun. I mean, I'm almost never going to take this type of trade. I have seen it before, many times, to be honest, where it will come up, wick into the inversion fair value gap, then sell off. I don't take those trades. I don't take those. That could be your model. It's just not mine. I'm not going to take that. I just need one great trade, and I'll wait for it. It needs to be obvious for me. How nice would it have been to get in this turtle soup right there, huh? That'd have been nice. ICT mentioned he's going to teach turtle soups. I hope he does, because I don't do turtle soups. There's not much out there about them, so I don't trade them. 50% of this retracement right here is sitting at the midpoint of this inversion fair value gap. That looks nice. The 62% retracement level of OTE is sitting right at the breaker. That looks nice as well. The 70%, the optimal trade entry level at 70% is sitting right under this bearish order block, which also looks nice. So I think we have some opportunities when price comes back up here. We just want to make sure it doesn't push through those levels. Turtle soup is basically when it wicks above a key level, closes lower, and then sells off. People covet the idea of getting in on this wick right here or the next candle after and then taking the short. But many times is when if you try it, you think, oh, this is the high. Then it goes a little bit higher. It goes a little bit higher, a little bit higher. So there's other confluences involved in making sure your turtle soup works. All right, so we dug a little bit deeper back into this inversion fair value gap here. I'm not interested in that. I want it to move higher. What do we got for the 2 minute here? I got a little too much on here. I already know what those levels are. Okay, we got a 30 second, have fair value gap here. Small fair value gap right here at the midpoint. The problem is you got to understand these are big candles. So from this, if we take our entry here, now I'm talking risk management, that's 13 handles. You got to be able to handle a 13 handle drawdown. So you need to adjust your size appropriately to make sure you're not oversizing, that you can handle a 13 handle drawdown. I mean, that's what, $260 with one mini. So there's a small volume imbalance sitting right here above it. There's a chance price could wick up into this level, respecting this breaker. So I think for me personally, I will take an entry when we hit this breaker. I think I'm going to be a little more conservative today and be willing to miss a move because NFP is tomorrow. Remember, NFP is tomorrow. Price action the day before can be wonky. So I'm going to require this to do this to come up to this level. Yeah, Brendan, I will answer that. I won't do it when I'm doing commentary in the moment right now. I'll answer that question because I do incorporate it in about everything that I do. But when I'm talking about price action, we really stick to the charts. So we'll talk about that here in a bit. But I'm glad you're here, man. I'm glad you're here, and this is a community of traders. At least on my end, what I want it to be is a community of traders where we focus on trading, but we also include our faith. I'm going to take a short right there. All right, there's my short. We have a fair value gap sitting right here. If we close above this, I'm going to be done. It looks strong, guys. It really does.
Order submitted.
Going to close that. Not going to mess around. Did not work. Did not respect it at all. I'm not taking this because we already ran a high. I'm not going to take a long once we wicked above the previous day high. So that's out of the question for me. Well, way to go, Charles. Way to take it. I'm glad you made some money off it. Looks like it wants to move higher. Let's see if it actually does. Okay, I took that long on my cash account because I took the last trade on my I did it on my cash and eval or performance account. I took this long back on my personal account, got that back to break even, so still took that loss on my funded account though. You'll see that loss there for $328 copied on multiple accounts. So it looks like price wants to go higher. That's fine with me. So obviously this swing high wants to move higher. Now the question is, are we going to pump higher or are we just doing another stab higher and then going to move the other direction? We'll find out. I would like to find support at this level. I would like to find support in this fair value gap here. If we're going to see that, we need to find support in this fair value gap, maybe wicking into the previous day high, and we should find support here. If we find support here, we can use an inversion to go long. How high could we go? Let's do one standard deviation from this low to this high. So that's where it would go. One standard deviation is about right above the 929 from the 29th for the new day opening gap. Why do I use standard deviation? Well, look at how accurate this is. I'm just pulling this out right now. If we go from this low to this high, look where it lands. From this low, from that high to this low, and we do one standard deviation, that's right here. Look what wicks right into it. So the safe answer for me is if I'm going to find out how high could this go, that's what I'd want to do, somewhere around that level. And I like that it overlaps with this new day opening gap. I like that. Good morning for anybody just joining us. We took a loss earlier. We went short at this breaker, failed, got some of that back, playing this push into the high. Right now I'm expecting or reanalyzing my bias to where we may run for this new day opening gap. Where's that sitting here? I like that. Let's go to the 1 hour. We got a 1 hour fair value gap that's sitting up here. Let me drop a box on that. This is a 1 hour fair value gap sitting right there. Right now we're inside the 4 hour fair value gap. So oh, look at that. Are we going to call that manipulation or what? Let's see if it wants to find support at the previous day high. This is important. We need to find relative support around this area if we're going to see higher prices. If it doesn't, then we need more information to figure out what our direction is. I mean, I still like this down move to the downside. I really do. I mean, but I'm willing to adjust my bias based on the support of this previous day high. And knowing that it's very rare for both the high and the low to be ran in one day. Ooh, I would take that long right there. If it's aggressive here, it needs to go now if I'm going to do it.
Order submitted.
See if it closes. If it closes below this box, I'll exit out of the trade. I'm looking to get 15 handles. That's all I need. 60 ticks. Let's see if we can get 60 ticks out of this. Right there. So it doesn't even need to break the high. Our stop technically is below this, but I don't know if I want to hold that for 20 handles. If we get 2 stops in a row, guys, I'm going to be done for the day on my funded account.
Order submitted.
We're going to be done on those accounts. Not going to do another one on that. That sucks. Over 2 today, guys. Well, that you guys see. I did take another trade, but I won't be taking any more on the funded accounts. I'm logging that off, so you won't see this. It won't be on here anymore. The original low open still. The opening range gap. The opening range gap is closed. It closed a while ago. It closed immediately. Opening range gap is right here. We opened below it, closed it. I'm gonna wait till for my final opportunity if I'm gonna take one. I'll probably wait till 11 o'clock or the 11 o'clock macro. Getting a lot of back and forth here, and I'm not liking it. Wicking up into the previous day high there. You got a fair value gap sitting here. I want to watch this inversion, to be honest. I think that's the one I'm interested in. I like this reaction off of the previous day high. But wanting to see the macro time show up here. So Brennan, while we're waiting here, if you're, give me a thumbs up if you're still on. Thanks, Ray Bear. Brendan's the one that asked the question. I want to make sure he's here to answer it. I'm not going to go through the whole spiel if he's not. The whole spiel. Yeah, so in regards to how do I incorporate Christ into my trading, I will tell you I am not the trader where they feel like the Lord gave them the answer. Like, the number is 19,043, that it's going to arrive at that number. I believe the Lord could do that, but I don't think that's how he speaks most often. I really believe the Lord cares about our character and establishing building us up as sons of God, meaning he's going to teach us more about patience, more about being content with what the profits you've received. He's going to teach you about living by faith. He wants us to, right? He wants us to live in those ways. He wants to walk according to the principles of the kingdom of heaven. And the way I incorporate that in my trading is my journey has been a journey where the Lord has led me down the path that I'm at. All the way from having a dream about what's going to happen in the real estate market to him directing me to ICT, which is part of my journey, and then having confirmations along the way about actually doing this. And then there's story after story of the Lord teaching me to beat my body into submission. All right, look at this reaction right here, 940. Let's see how that closes right here. We're making equal highs right here. It's finding a lot of resistance. What I would like to see, I would like to see this. That's what I would like to see right now. This is too flat. I would like to see a purge of liquidity and then move lower if we're going to move lower. So the Lord's taught me so many principles, biblical principles that have applied directly to my trading and my trading journey, right? How many times have you gone trading or sat in front of the charts and you have a little bit of profit and then you just want to keep going, right? The Lord's convicted me about being content with the profits that he gives me for the day. That's a lesson in itself, right? He's also taught me how to beat my body into submission, right? He says you run like one running a race, beating your body into submission. Are you willing to do the things you know you're supposed to do despite how you feel? Right now, I want to take a trade. Right now, I want to get back the money that I lost. Are you disciplined enough to actually follow your rules? Right? All of these are biblical principles that as I share along in my journey, I share with my audience. I share with you. And I incorporate that as psychological principles that affect your trading, because trading is 90% psychology. It's all right here. Do you believe it? Right? Do you believe you can be successful? Right? The Bible says you can do all things through Christ who strengthens you. Okay, if that's the truth, if that's the word of God, do you believe it for your trading? Or do you, on your own, have negative self-talk where you're talking about, oh man, I can never figure this out. Oh man, I suck. Right? I just had 2 losing trades, but I am confident I know how to trade. There's no doubt in my mind. I have 0 doubt in my ability to trade. Now, at this point, do I and am I willing to follow my rules so I don't overtrade and try to get what I lost back? So I closed my account. Done with that. Done. We'll come back tomorrow. That's what I have to do. So that's part of my personal journey that I'm actually going through in this moment is, can I have the self-discipline to walk away when I know I need to? So that's how I incorporate my faith into my trading. We use technical analysis that anybody can use, but the psychological and part of trading is really personal to me because it is a big part of everybody's journey. In my journey, it's wrapped up in my faith, wrapped up in what I believe. And I believe the Lord's asked me to share this with the body of Christ, with other believers, with anybody that's willing to listen, because I believe that there's a day coming when we need to be able to make our own money and not be dependent upon somebody, an employer, right? We all went through COVID. What doesn't matter what you believe about COVID, the facts still remain the same, that the vaccine overall has had a bigger negative effect than it did a positive effect. I don't want to be in a position where I'm forced to do something I don't want to do. And I believe that the Lord's asked me to help people learn how to trade so they have the freedom to not be dependent on an employer. That is why I'm here. Hey, Jess, the shorty, you're welcome. You're welcome to head out anytime or hang out as much as you want. It's not turning religious. We're simply waiting for Price to do something. And if you don't want to be a part of that, you're welcome to leave. Anybody else watching and you don't like it, you're welcome to leave as well. I refuse to let the opinions of people affect how I talk. Okay, I wanted to see this happen. We didn't get it. We're in the macro time. I really wanted to see this level ran, but we're not getting that. So if we close here, I mean, to be honest, I still think my bias was right from the beginning. I think we're going lower. There's too much evidence down there for me to think otherwise. It's just finding out where is our entry going to be. $14 seconds here. I'm going to do a small entry here. Ugh, son of a gun. Missed it. Missed it. That's frustrating. I really wanted that to happen. That would have been my signature in price. Here's the point: you have to be super, super careful and not chase. If you try to go short because you think it's going to run this low, it will run against you first. It's happened to me so many times. But when it does run in your favor, you just got to say it's okay. There will be a different opportunity. And it's going to be right there. I'm going to take a short right here. Right at this low to see if we get an expansion lower, at least to the midpoint of this wick. I'm going to see if that wants to do that for me. Okay, I'm going to hold it there, see if it wants to go any lower. All right, I'm going to sell there. All right, so what did I do here? I was on my personal account. Once we wicked in here and we came back up to this level here, I took a short here expecting it to at least hit the consequent encroachment, if not run lower. So as soon as we went below that and below this one, I figured we'd get some type of expansion, so that's when I sold down here. I am completely out of that at this moment. The other thing is that was a I got in short at 23 and sold at 6. 19,023 and I sold at 19,006. The other reason I sold is we're inside this fair value gap. It's the last one before the next swing low, right down here. So we really want to see this close below this. We also have this new day opening gap sitting right here. So drawing liquidity is lower. We're just looking for our next opportunity. Getting in short at this point is a mistake. Having a retracement higher into somewhere in this level here would be really nice. But just taking it straight off of here, I think is a mistake at this point. Because we've already traveled so much and we're stopping inside of a fair value gap. It could continue, but it's a 50-50 shot. Do you want to risk your own capital with 50-50 odds? I don't. I don't. If you were in the trade up here, then you can take it and you can run short. Cool, I'm glad you're here, Brendan. All right, so see how this candle closed inside the fair value gap? It wicked into the new day opening gap, but then closed above. That closed above this fair value gap, okay? Be careful. I see we could get some type of retracement here. People thinking we're going to go short, and then it just runs aggressively and then continues lower. That's what you have to be careful of. Okay, right now we have a 5-minute breaker sitting right here. This is a breaker at on the 5-minute time frame. We're gonna get rid of this breaker. It's irrelevant. This is irrelevant. We'll get rid of some of this stuff here. I think my target is going to be 930. If I can get another opportunity to go short to 930, I think that's what I want to do. Got a breaker in here on the 1 minute as well. Low, high, low, or high, low, higher high, break low. So this would be a breaker. You could do the breaker on the body as well. Let's see what it wants to do here. Honestly, would love just a little bit more of a retracement. I don't want it to go short based on that. And by the way, going on Jassy, the shorty's comment, it's turning religious. There's nothing religious about what I'm talking about. These are principles that the Bible tells us to live by that have so much real life application. It's unreal. So I don't see this as religious, guys. This is not. It's just personal experience and what I've seen to be the things that are working, the things that work. I mean, if you've learned something that is wholeheartedly true and you've seen the evidence so much, don't you feel compelled to tell people? That's me. That's this situation. All right, so we closed below this, but like I said, I'm not interested in dropping yet. Let's see if it wants to drop. We got some. This is what I want it to go higher. Let's just say that. %, Brendan. You know what's crazy is a lot of these principles people live by and they don't even realize it, that they're biblical principles. I mean, I like that wick. I wish it was a little higher. Yeah, it needs to go a little higher for me. It did wick into the 5-minute though. See, there's the 5-minute wick right there. I wanted to go a little bit higher though. It could drop from here because it did just go into this 5-minute, but I'm wanting a little bit more. I would also like an inversion fair value gap to the downside, also to give for confirmation for an entry. Four minutes till 11 o'clock. I like this level here. Oh, I like that one, Richard. I want this to stay green. Okay, good. Go a little bit higher for me. All right, we are looking at, I'm watching these two levels here. I want to see price come up into them. find some resistance and then give me a 1 minute change in state of delivery, maybe a bullish fair value gap that's violated to the downside. That's what I would like to see if we're going to go lower. Now, we could find support here and we could continue higher, which is very possible considering we have this big range, this big drop. So in light of this range, we are in discount. In light of the range, we are in discount. That's just, you have to view it that way. From this high to this low, come on, just give it to me. We'll just do that. Here's 50%. We almost came up to 50%, a little shy of it. So I still like this level without actually running the lows. It just needs to give it to me. Show me it wants to do that. Show me in the form of it needs to give me a model for an entry. See if we can find resistance right here. See if it wants to push down into this level here. That's what I want to see it to push down into this level right here. There it goes. Past it. Let's see if it wants to continue. Hit the new day opening gap. There it is. All right. I took another short there. Once we wicked back up into this level right here, I took that as a short. This would have been a mitigation. It's very similar to a breaker. You got your high, low, lower high. We break lower. We break below the key level of support, which is this new day opening gap, and we wicked back up into it right there. And that's where I took my short, hoping that we would see an expansion lower based on the move we saw right here. So I took that as a short and got out, not wanting to hold it very long because, if I'm honest, I'm starting to second guess my bias. I still think we hit this level. I don't think we hit our equal lows, and I think we potentially have room for higher prices if we need to. But I like how aggressive that was. That was a nice move. That was a great move. I'll be done today on my personal account. I'll show you guys here just so you can see the executions. So you know I'm not just pulling things out of my butt. I hate when people did that. Alright, so here's my executions. This is where I went short at 988. And I sold it at 958. So that was a 30 handle drop. Right there. So that was the trade that I just took. Okay. Now I don't call out every trade, and the reason why I don't do that is because this is not a signal service. This is education, and you got to have your own history. You got to build history with the charts. You got to build your own history with watching price action and take your own individual risks that you're willing to take. I took mine. That was one, that wasn't one of the models that I take. That was not a model that I take. That was based on order flow, knowing how price comes up to a particular level, expecting to see some type of expansion lower, and knowing, watching this wick right here, or this midpoint of this wick, closing below it or pushing below it, I'm like, I'm out. I'll take it. The model that I normally take, we had 2 losing trades on today. Unfortunately, it was 2 losses for today's trading there. So basically, I think I went 2 for 4. 2 wins, 2 losses. 2 wins, 2 losses today. I'm okay with that. I'm green on cash account, down on my funded accounts. Is what it is. That's what I mean. When I say when you have a loss, you can't let that loss affect the rest of your life. You can't now think, oh, I suck as a trader. I had a loss. Losses are inevitable. This is one of the hardest things that I've had to overcome, is changing that psychology of a loss doesn't mean I'm a bad trader. A loss means it's a freaking loss. And I have to manage myself and my risk appropriately so I can stay in the game long term. It still sucks. I mean, I hate looking at it. I mean, I'll look at it later today and I'm going to see that big red number and I'm still going to hate it. I'm still going to want to try to get it lower, but I have to be disciplined in my trading and walk away and let it be what it is. And it gets harder when you go to bigger size. It gets harder and it gets riskier when you just it's a lot more when you start sizing up. It's a lot more when you start sizing up. All right, I'm expecting 930 to be hit. I want to see, I'm kind of hanging out till we hit 930, the 930 opening price. So I called everything that happened today. I called. I just was a little early. I wanted it to happen here, but it happened here. Okay. I thought we were short here because we hit our level, but it came back for a second stab and then dropped. So timing for me was off. Yeah, that sucks because normally this would be it. This is also in our macro time, the 10 a.m. macro. But it gave us another manipulative move. Look where that lands you. I like where this manipulation leg here, we got midnight open for 1 standard deviation. That'd be nice to see us get down to there. I want to see us find support or resistance right here. Why that low? That's the lowest body close from the accumulation side. On the seller side, on the distribution side, on the sell side of the curve, we want to find resistance around this level. You can wick past it, but ultimately you want to see price slow down around this level and continue and finish the sell model, which is the 930 price. So the 930 price is the finish of this model. We got this inversion fair value gap right here. Okay, we just closed below it. Let's see if we expand lower right here. I'm expecting it to. I know we didn't hit this high, and technically it doesn't have to. We even have this 30-second wick right here as a down close candle. So I would like it to come up to this level. Violation. See if we close what we do here. Hit 50% right here on this retracement from this expansion move lower. This would be a nice place to be honest, to retrace up to and then continue lower. We could wick up into the new day opening gap, which we have a low right here on this leg. See if we get some type of rejection here. Okay, we wicked up into this level. I want to see it expand lower now. That's what I'd like to see after hitting this low. Targeting these lows and the 930 open would be nice. See if it has enough energy to do that. Really, if it's going to, it's going to be aggressive now, but I'm not sure if it wants to be that aggressive. Come on. Here we go. I got here. So I took 2 micro contracts. We're currently in, I sold one at 10 handles. We're going to see if this wants to do that. I got in based on us wicking up into that level that I told you about. Let's see if it wants to expand lower here or not. It really should do it relatively soon. If it doesn't, then we're probably not going to get that, and it will retrace me back. So we're going to set a buy stop right there. So it's a break-even trade, zero risk on my part. If it's going to run, I'm going to let it run because I want to learn to hold runners for bigger moves. This would be a, how big of a move would this be? Am I in at 76? Down to that low, that's 59 handles. And down to the 930 open, it's 90 handles. So we're going to see if we can hold it for that. Now I'm hardly ever watching that chart. So my chart that I'm watching is at 76, so I was short right here. My stop is currently at break even. First target is going to be this level right there. I like the expansion we've seen so far. I don't like this retracement. That sucks. I'm not liking that. The 5-minute candle just closed and we didn't close below that 5-minute fair value gap. Or the 5-minute candle didn't make an order block right here. You guys see that? So this would have been an order block if we closed below it. We didn't. I don't like that. It still could drop. It's a signature in price. I don't want to see it because that's not in my favor. Okay, we didn't make a lower low on this. That's not a good sign either. I think I'm going to sell that trade. We got it for 40 handles there. I ended up selling that. I didn't like the way this candle closed. Didn't like the way the 5-minute closed. We could still drop right here. I feel like we could come back up to this level. And I'm not going to let it retrace and stop me out at break even. After you already have what would that be? 30 handles. I'm not going to have it retrace back to zero. I'll wait. See if it gives another opportunity. All right, there's a close below there. Nice inversion play. That would have been nice. Found resistance at the new day opening gap. Let's see if it wants to run these lows. The swing low. If it does, we should run this low down here. We're outside the macro time. We're at 11:20. I think I'm going to be done for today, folks. I think I'm going to be done. Isn't price too low? Yeah, but you got to understand the model that we're doing here. This is a market maker sell model. This level, most of the time, will be hit. The only time it won't be hit is if we are truly bullish and we're going to go higher. But right now, what I see is our first stage of distribution. Our second stage of distribution happens after a period of consolidation. So we'll see price do this bit right here. I don't know how long, then aggressively run this level. And it could either run more or find some support here and then come back into the range. But you want to view these in its own right, in its own terms, as a model it does all the time. It accumulates orders, goes longer, gets people to go long. They're going long, and then they run against all of those longs. So this is the market maker sell model, and everything that you do in regards to price should be in light of this model. Every short, every long, this is how you are profitable most of the time, is when you understand that this comes to an end and then it comes and takes all those orders back. You could do it the other way around as well. Here, let's just view this in a smaller way, right? Here's a mini market maker buy model. Look at this. Consolidation. We have our distribution first. We have our smart money reversal. We have our breaker and our expansion higher, running these highs. That's exactly what happened in this bit of price action right here. Now, I didn't see this because I was looking at the bigger portion of it and thought that this was our smart money reversal right here. This was the smart money reversal, taking people out of their positions. That's why I had my 2 losses. I had my analysis incorrect in regards to when we were going to go short. I wanted price to go short. I had that correct. I talked about it from down here that I wanted it to go up here, hit this level, and then come back down. Go back to the beginning of the stream and listen for it. I talked about that. I wanted it to do this. I talked about other things, but this primarily was what I wanted to see happen. I thought it was right here. I thought the move was right here. I misinterpreted the move to be right here, and it ran against me twice. I took this move and like, oh crap, we must want to go higher, discarding my initial analysis. This is one of the things I'm learning. This is most days, go back in price action, Deborah, do it yourself, and look at the charts and find out where you see it. You have to do that yourself. You can't just take my word for it. If you want to get better at this, you got to go into the charts and find it yourself, but it happens a lot. Go and find it. See if you can find it. So I wanted to go short right here. I went short right here. It ran against me. I discarded my initial assessment that we were going to run lower. And when we gave me this bullish candle right here, this candle right here, I went long. disregarding what I initially thought. And guess what happened? It ran against me again, stopping me out. So I had 2 wrong assessments on the market, but I had my higher time frame analysis correct. So that's how I had my 2 losses today. I was premature in my short. There's the drop, folks. There's the drop. Watch it run. It will run aggressively. It won't stop. It will run this whole way. Meaning, I'm not saying it's going to be in one candle. Don't misinterpret what I'm saying. But it's going to be big candles like this. That's how I think it'll do it. Big candles. And if it runs the other way, then I'm wrong. That's okay. But normally when you start seeing it break out, it's aggressive to finish it out. Let's watch this play out. Let's see if it does it here. I'll own it if I'm wrong. I will own it if I'm wrong. But this is what I would want to see. If I was short here, I would not be selling. I'd be holding it to here, 100%. 100% would not be concerned. Way to go, Charles. New York Open, yes, Deborah. Okay, we made a lower low there. Nice lower low. Now we should, there it is. What did I say? Called it. Called it. Exactly what I said. It'll be aggressive in this approach to the 930. That's exactly what happened, folks. Now, from this point, we could continue down to these equal lows. We might start consolidating. I don't know. I just knew that this was our target because we literally just start moving higher from the 930 price. So there you have it, folks. There's a lesson on market maker, sell, and buy models. That structure right there is my background on my computer, by the way. Not this exact one, but this concept I have marked out, labeled, and is on my home screen. Let's see if I can show you here. Let's go to my big monitor. There's you can see only part of the screen right now, but because I have an ultra wide screen, so this all, can you see my mouse? There it is. All of this is on my screen. That's what I see every day because that is how the market moves. This right here is what you would call a smart chase. I did not take it. I didn't take it because I'm done. But that is a nice chase. What's up, Deborah? Thanks, Charles. Have a good day, man. We'll see you guys tomorrow. I'll be on tomorrow as well. We'll be calling it a day here shortly. What's up? No. They can hear you.
I'm gonna tell you about Bible.
You're not reading from there, are you? You should be reading
No, like
out of the regular
I
Bible.
read from the regular Bible, but I wanted to read the action Bible.
Okay, can you show Mom, or is she in a meeting?
She's on a call.
All right, I'll be done shortly.
Okay.
Deborah, your question. What if when open it starts selling off? Is that model invalid? It's just the other way around. You also need to know the context. Hey, Peter. You also need to know the context on when price is going to actually do this. and this could have been a trend day. I gave two options. We could either come up here and then come back down, which is one of my options that I mentioned, or you will see a trend day, meaning it's not going to come back down here and it's just going to continue higher. And I expected that not to be the trend day. I got manipulated out here. I'll be the first to admit it, folks. I made two mistakes here today. I made two mistakes changing my, well, one, calling it early, and two, changing my bias, thinking we're extending longer, abandoning my initial assessment, which was we were going to run this opening price here. Now, if we sell off, you can look for the same concept, Deborah. If we sell off from here, it could be the other way around. So this is not just buy first, then sell. We could be sell first, then buy. Let's go look in price. There's one right here. It's not always as pretty as we want it to be. Here's one right here. Here's an example of a sell-off and a buy. We sell off. We make our lower low. And what do? We push higher, just sweeping this high. That is the market maker buy model right there. What happens after that can be different depending on the market conditions. Here's another one. Here's our consolidation. Here's our distribution lower. And here's the snag, and look where we wick. We wick just above these two up closed candles. It happens everywhere. So your job is not to just think, oh, I know it, now I'm going to go long. If you do that, you will fail. This is a structure to read price in. Okay, so meaning, if we see this price action here and we start moving aggressively this way, you may want to consider it to be a buy model. And where would your entry be if it is a buy model? That's your question. For me, that would have been right here. This is the close. A close above this level is an inversion fair value gap, and you would have had to hold through this drawdown, but you could have sold here, or held to here. Now, sometimes the models don't always complete, or we're in a market maker, or you may think, well, this is the market maker buy model right here. It started, or sell buy model right here. It started here. So you think this is the beginning, it sells off, and we only get to here. In a bearish market, if we're trying to go long in a bearish market, it will probably not reach the highs of where the initial consolidation is. It will find another level and then continue the sell-off. See, here's another example of how you could misinterpret that. This is the completion of it right here, but many people would see this as, oh, well, it's right here. We're going to come all the way back up to this level. They go long right here, and it doesn't go long. That's because we're in a downtrend. Okay? Downtrends, market maker buy models and downtrends typically are short-lived, and they don't complete all the way. Market maker sell models and downtrends will not only complete the model, but continue lower. So let's look at this example that from today. If we look at this as a market maker sell model in a down move, this could extend even further lower. Now, I'm not sure it's going to do that today because we have non-farm payroll tomorrow, but that's a possibility that we could continue just to grind lower because overall we've been in a down market. We just got done with this huge down move from last week, right over here if you look on the 15-minute. So here's the 15-minute. We have this big down move. This is our market maker sell model in a bearish market. This has the possibility to continue lower. The ultimate draw right now is these equal lows. And if it does grab that, that's rare because, like I said, it's rare for it to grab the previous day high and the previous day low in the same trading session. But that just tells you this is going to be potentially a big day. It could be, or it's just ranging, trying to grab orders for tomorrow. BOS. What's BOS? I don't know what BOS is. Overall, good trading day. I am bummed that I took those 2 losses, but I have to learn from it. I need to remember. I always think I always think opportunities are coming faster than they are. I always think that they're coming faster than they are. So we had this here, and I thought we were going to do this. That's what I thought we were going to do. Because that's where I went short. I went short right here. That's what I thought we were going to do. I was wrong. Nope, we did just one more and then dropped. Look at this signature and price here. Going back and look at old moves is very important. This is what you guys should be looking at. Like, I mean, we should spend more time on this than anything that happens now. Forget price action right now. This is what we need to be looking at and how price moves. Okay? This is where we need to be drawing our Fibonacci tools, our support, our inversion fair value gaps. This is where we need to do that. Because this is where your money will be made predominantly. So starting, and I'm talking through this for my benefit. You guys just get to listen. You guys get to be a part of it. Because this is where I can grow in my trading right now. I see the opportunity for growth and I'm going to take it. I'll just stay on for a little bit longer since I'm already going to do that. And it helps me to talk it out loud anyway. So you guys get that benefit. All right, so what happened at the open? Let's talk about, you know what? We're going to turn this into a quick video. All right. So you guys are going to see me make a video right now. Okay. Let me think how I'm going to start it off. We just saw a market maker sell model begin and end in today's trading session, and we're going to review every part of this market maker sell model because if you want to become a profitable trader, this is what you need to focus on. Disregard everything else, all your trade ideas, all your setups. If you view them in the context of what you're seeing on this screen right here, you'll have more opportunities to be successful. So let's begin with the opening price. Right here, we have the opening price at 930. 930 opened right here. And immediately we started pushing higher. We filled this opening range gap immediately. So that took away our first opportunity for a potential draw in liquidity. At this point, we're just seeing price finding support and resistance at these new day opening gaps, which we have marked, which show up every single day. Then we mark out our previous day low and our previous day high, which is sitting right here. Now, the previous day high is also sitting within this 15-minute fair value gap. So what I expected price to do was to come up to this level and then sell off. Now, I made two mistakes in my trading today where I actually sold. I went short right here, expecting us to go lower and missed that opportunity, and then disregarded my bias and went long right here and took another loss. Lesson learned. How can you learn from this? Well, the nice thing about market maker sell models and market maker buy models is they have structure, very obvious structure. Initially, we have our accumulation or our consolidation before the move begins. The 9:30 bell opens. We have news at 10 o'clock, so we're not going to take any trades till after 10 o'clock anyway. So we have 30 minutes of waiting. We see for 30 minutes price tick higher, and at 10 o'clock we get this nice big green candle right here. Now, when we look at this big green candle, we're so close to the previous day high that in my mind, we need to wait for a key level to be hit. Anytime you want to use a market maker buy or sell model, it needs to be in the context of hitting a higher time frame key level. What is that higher time frame key level? Well, it's the previous day's high or yesterday's high. That is a very significant key level that we can put our eyes on and look to see how price reacts. Well, price reacted pretty significantly, and I personally, my first loss was looking for a sell right here. I was waiting for the breaker to take place right here, and ultimately it came up into it, gave me 5 handles, and then just exploded right past it and didn't give me an opportunity to do anything else. So I took an L on that one. At this point in time, seeing the 9:30 opening price and seeing that we literally did not drop below this, I knew we were going to hit this level. I had conviction on that. But when we broke through that and I kind of got butthurt that I had a loss and we started moving higher, I took another long here on the 30-second chart where I thought that price was going to be a trend day and we were just going to move higher and higher, but we didn't. We closed right here. I took a long right here and it immediately ran against me. That's where I'm like, okay, need to take a second. Let's reevaluate and look at what my original analysis was. And my original analysis was that we were going to run our opening 9:30 price down here. So what do we have here? We have our first accumulation stage. We have our second accumulation stage. And then we have our smart money reversal that takes place right here. This is our low risk entry, which I missed that opportunity because I wasn't looking at a market maker sell model. I thought we were going long, so I missed that. Okay. Next key indicator in price is the previous day high. After we come back below it, look how we respect this level once we break through it. 1, 2, 3, 4 times we wick into that previous day high, not running higher. Now, admittedly, what I was looking for was a purge on that liquidity right here. I wanted it to run there and then drop. So this is what I was waiting for in price to give me the confirmation that price was actually going to move lower. Well, it didn't. It didn't do that. We maintained this idea of relatively equal highs and we dropped. So I missed this opportunity here. Okay? Because when you look for something specific, it doesn't happen, you got to be willing to miss a move and just let price go. Okay? Now, where did we get some opportunities? Okay? Once we had this sell-off, I knew that we were probably going to get bigger moves. So I initially took a trade here. Once we broke lower and we got this retracement, I targeted the new day opening gap. and we made a trade from this point to about here. I didn't hold it through the whole thing, expecting we were going to come down to here. Then we consolidated above the new day opening gap. What is this called? This is called our first stage distribution. This is the first stage of your distribution part of the market maker sell model that we have right here. What do we look for in this stage? Well, we expect price to move aggressively pretty quickly, not running these lows, because we should have a second stage of distribution, which we see right here. We'll talk about that in a second. Now, when we have our first stage distribution, there's a couple different things that can happen. It has the ability to, it can retrace very small, very lightly, like it did here, and move lower, or it could actually run a little bit deeper. I wanted it to see, admittedly, again, wanted it to see it go a little bit deeper. I wanted it to go into this level right here. What is this level right here? That is a breaker box. This is a breaker box right here where I wanted price to come into. We have our high, low, higher high. And as we break lower, I wanted price to just wick up in here to say, hey, I see this level and now I want to go lower. Well, it didn't give us that opportunity. It didn't give us that opportunity. Instead, it sold off right here, reaching for our first fair value gap of the day. This was our first fair value gap of the day. Now, what happens after we get our next big move? We get a retracement. Now, I did call this out and I did take this short. When you wait for your stage 2 distribution, you want it to come up to a key level. That key level is on the other side of the market maker sell model. That is this level right here. This is the low, the lowest closed body on the 1 minute time frame. You could have done this on the 30-second, the 5-minute. The levels would change. This is why you got to thumb through the 30, 1 minute, and 2 minute time frames to see which looks more advantageous. But price hit this level and I took a short. That's where I took a short, and I took that short for about 30 handles right here. Now, I did end up selling it before we got this retracement. I wanted, and one thing that I need to work on in my personal trading is understanding that we are in a market maker sell model. I need to believe it even more, because when I get this retracement, I get scared out of my trade. Instead of realizing that we're in the second stage of distribution and we're going to have some consolidation before the final descent into the original, the beginning part of the market maker sell model, which was right here. The last thing that you want to know is that once we start expanding lower, after your second stage distribution, it tends to be very, very aggressive. And I called this out in the stream. You can check out the stream. I'll link that video up here. But you can see right here that it went and ran this level in 2 candles. This is indicative of the second portion of the second stage distribution, where it will aggressively run that final move, as you can see right here. And since then, we've been consolidating. We have these equal lows that are down here, but it doesn't want to run those. It may want to wait for NFP, which is tomorrow. But this is the ultimate structure that you need to understand as a day trader if you want to see more success in your trading. And if you just study this model, if you just look at this and find this in price action and then try to identify these key levels that I've pointed out here, you'll begin to recognize them more and more in your own trading, and you'll be able to execute on them like I did here. Now, there's multiple things that you can work on. I'm better on my executions, but I'm not very good at holding my trades for longer moves. I'm more comfortable taking my 10, 15, 20 handles, getting in, getting out, and being done, when I could have capitalized on a significantly larger move. This would have been 90 handles from the time that I entered to the low. That would have been 90 handles that I would have been able to capitalize on, but I didn't because I haven't learned to hold my trades longer. So we'll make that for another video. If you like content like this, hit the like button, subscribe. Thanks for watching. We'll see you in the next video. Take care. You guys just saw me record. You just saw how I record videos right there. That's it. You got it. That's the short on market maker sell models. Honestly, for the day before NFP is a great trading. Great trading session. I have to learn from the 2 losses that I took and realize that I just gotta irritating. See? Losses still suck. Even though I know that it doesn't affect my long-term analysis, losing still sucks. And I looked at the numbers. I mean, between my 2 losses, it was $700, almost $800, and that's copied on multiple accounts. Ugh, it hurts. Okay, guys, we're gonna be done for the day. Thanks for watching. We'll be here tomorrow, 9:20 Eastern Standard Time. Right before, 10 minutes before New York Open, we'll be here. We'll be trading. Thanks for watching, guys. Hit the like button. Use the code DTJ for any Apex evals that you may do if you want to start your funded journey on that. That's what I use predominantly alongside of my cash account. So thanks for watching, guys. We'll be here tomorrow.